Hello, good morning, ladies and gentlemen. I welcome you to another promising session on the morning live with me as we take a technical dissection of the current market structure in anticipation of preparing ourselves ahead of the London and the New York session today. And we all know how big today is going to be as we have series of macroeconomic events that we are going to be looking forward to, and we have been seeing the markets anticipating this event in sort of in series of consolidation phases across the market. And as usual, the first thing we are going to be doing this morning is to dive into the calendar to be able to look at what we're expecting and what majority in the market are expecting for today in order to position ourselves ahead of the trading session. So join me as we look at the macroeconomic calendar. And on the calendar here for Wednesday, April 12th, we have the first economic event is coming up in how many hours from now? I think 4 hours from now, and that is the consumer price index. So the consumer price index is a measure of price movement by the comparison between the retail prices of a representative shopping basket of goods and services. So one of the effects of the consumer price index is to give us an inclination into the variance in the in the inflation rate in the US economy. So the previous data we have here is 0.5%, and the consensus are projecting a 0.4%, which is on the downside. Then we also have the consumer price index for the year on year, which gives us a clue into the inflation rate, which is still on the high side anyways, as the Fed are still looking at a target of 2%. And if you look at what we have here, is really quite on the high side, and there is a likelihood that this will determine the interest rate hike decision for next month. So we are going to be looking forward to that one too. And then in 5 hours from now, the Bank of England's governor is going to be speaking. He's going to be having a speech, and this will buttress. He will be talking about the policy, the monetary policies of the UK economy too as well, which will also give us an indication into the health of the economy. Then later on today, in about 9 to 10 hours from now, we have the FOMC minute, which will be released for the previous month, and this is a release that is done by the Board of Governors of the Federal Reserve, and it will also give us a clear indication into the future of the US interest rate policy. So these are very high impact events that majority in the market will be looking forward to, and obviously we shall be seeing the anticipation of this event reflect on the chart as price action. So with that being said here, with the information we have here, so let's go right into the chart to take a technical standpoint of what is really going on in the market in order to be able to understand the psychology and to see where the momentum is building towards on all of the instruments that we have been monitoring since the beginning of the week. And I would like to buttress here that whatever instrument we are talking about today is as a result of my weekly publication, which I normally do during the course of the weekend, and I advise you to watch them if you haven't, so that you can have a background knowledge of what I'm talking about here. So basically what I do here is to analyze the lower time frame, which is the our execution time frame, and whatever structure I'm going to be applying on the chart will be basically on the 1 hour time frame. So it's very important that you understand how we got to that point by watching these videos, so that you can have a background knowledge of what we are talking about. And to make things easy, I've dropped the link to these videos in the description box of this current video you are watching, so you might want to try to watch them after the live session, so there are timestamps there where it will be easy for you to navigate through whatever aspect you want to be focusing on in that video. So with that being said, here once again I welcome you all. Good morning everyone, and let's kickstart the live session. So let me know if you can hear me. If things are going on fine, it's okay. I would appreciate that you just give me a comment in the comment box so that I know that we're on the same page here. So with that being said, the first commodity we are going to be looking at this morning is the US oil. So on the US oil here, we had a choppy situation happen yesterday. We had some selling opportunities, and at the same time we had some buying opportunities as well on this market. And if we look at what has been happening here since the beginning of the week, so I would like us to look at what really has been going on this chart. Daily, thank you very much, Daily. I appreciate that. All right. So if we look at the chart here since the beginning of the week, you will see that price action was initially trapped within the $81 level and the $80.45 area. So you might be asking me, why do I normally start with how the week started? You see, when we start from where the week started, it helps us to have a view into how people in this market are actually relating with this current market structure. It helps us to understand if we are going bearish or if we are going bullish. So the range at which the week started is a clue of how the momentum has been building so far in the last couple of days. So that is why we always try to emphasize on how the week has started. Let's see what has happened afterwards and what is really happening at the particular point in time we are in, and then we shall be deliberating on how we are going to be positioning ourselves ahead of the trading sessions. So the week started with a situation here where we saw price action trapped within the $81 level and the $80.45 area. And you all know what we look out for whenever we have this kind of simple structure. We need price action to either break out of that channel to give us an opportunity to buy, or breakdown of the channel for an opportunity to sell. And in fact, we had a bearish signal at the beginning of the week where we had our first sell position after price action broke down and then retested the $80.45 level. So we had an opportunity of scooping some profits there, but it didn't last long as we saw our price action came back into the entry point. Then during the course of yesterday's trading session, we saw the same thing happen here. We saw selling pressure here. Then we also identified the $80.25 level where we were looking out for selling opportunity below that structure. And as you can see here, yesterday we saw our price moved about 100 pips in our favor before this bullish momentum started. And if you look at the structure here, if we zoom out a little bit to look at how the market has been, how price action has been reacting to this current market structure, one of the first things you would observe here is that demand zone. As you can see, despite the fact that we have a choppy situation where price action has been giving us a sign that sellers might likely come in, you will see that as soon as price gets into that range within the $80 mark and the $79.50 level, we begin to see buy pressure resume from that area. And what does this tell us about that area? It tells us how that area has a strong memory for buying power, as we need to be very, very careful when opening a position around that area. And if you recall, during my live session yesterday, I told us all that even as price action breaks down that $80 level, we need to be very, very careful, as we still need some confirmations to happen, which is likely going to be coming in the form of a retest of that $80 level, where selling pressure resumes below that structure on our lower time frame to give us an opportunity to sell. But if you look at what happened here yesterday, we saw our price action broke above that $80 mark here to push price to the upside. So at this point in time, after selling momentum took us down into the $79 mark, we saw buy pressure resume, taking us out of all our sell position. And I hope you moved your stop loss accordingly, because I always mention here that whenever we have price action move significantly in our favor, what we want to be doing is to ensure that we secure that position by moving our stop loss accordingly. So you could either move your stop loss to your entry point, so that even if price takes us out of that position, the worst case scenario we are going to be is going to be a break even. And you can also move your stop loss to like 10, 20, 30 pips depending on your tendencies in that market, to secure that position just in case price action moves against. Now we saw price action move against us, and remember I told us all yesterday that if price action continues where it breaks out of the $80.45 level, we are going to be looking out for buying opportunity. And if you are lucky enough with your buy stop order above the structure, you would have had a buy position triggered, and if that is the case, you have currently be running with about 80 pips in profit. I think by this time you must have been taken out of that position, because I did an update this morning that we should be securing all the buy positions, as we had a breakout of the $81 level, which welcomed another buy position, and also the breakout of that $81.20 level, which also welcomed another buy position. And for the sake of clarity, I would like to share with you my update this morning as regards the US oil. So this was the US oil here. So this was our first sell position for the week before we were taken out, and then we had another one here, and I think yesterday is on the 11th. So let's go into, okay, so we had, all right, so price action takes out the sell position, so we had the buy position triggered. All right, so this is this morning's commentary. This morning I said secure all buy positions as the price finally breaks out of the resistance line at the $81.20 level for the first time. So if you had moved your stop loss, definitely you would have moved your stop loss to the entry point around that $81.20 level, and at this point you must have been taken out of that position right now. So at this point in time, we don't have any buy positions running right now. So what is going to be our plans for today, and how do we intend to take advantage of any trading opportunity from this point in the market? So for the sake of simplicity and clarity, I would like to delete some of the structures here so that we can have a clean chart and be able to dissect this from a fresh new perspective. So if you don't mind, I will delete some of this as we no longer need them, and if we want to reference them, we can be using my public platform in that regard. So this is what we have here, and don't forget that we have this channel that we identified at the beginning of the week, remember? So we have this channel here. So we had the breakout of this channel at the $81.20 level to give us a clue that buyers are gradually getting some momentum. Then secondly, we had the breakout of this bearish trend line, which was identified at the beginning of the week after connecting the series of lower highs. And what we saw here yesterday was a significant breakout of that trend line, which further emphasizes the strength of the buyers in this market. So you can see how strong this demand zone has been, despite the fact that sellers have been trying to break down that structure. Now we can see that buyers are really strong within the structure. Then another thing I would like to call our attention to here, if you remember at the beginning of the week, we identified the fact that throughout the course of last week's trading session, we saw how price action was caught within a consolidation phase between the $81.20 level and the $79.50 area throughout the course of last week's trading session. And this is a sign that there is an indecision in this market, and you all know what we look out for whenever we have this kind of simple flat channel. We want to see price action either break out of the channel to the upside for a buy opportunity, or break down the channel to the downside for selling opportunity. And if we zoom into what has been happening here since the later part of the New York session yesterday, we have seen how price has broken out of that structure to give us a signal that we might be having a huge move to the upside anytime soon. And look at what has been happening here. We saw the breakout retest, we saw buy pressures resuming again around this area, but I'm of the opinion that we might be seeing a retracement anytime soon into structure, and that is going to be coming if we take into consideration the impulsive move that started during the New York session yesterday to the upside. So we all know from a technical standpoint that one point in time, whenever price action goes through an impulsive move like this, there is a likelihood that a retracement phase could happen, as those who took advantage of this move at a very cheap price will definitely want to be doing some profit taking activities, which shall reflect on the chart in the form of a retracement to the downside, probably into our structure, before another wave of bullish momentum will happen. And if we look at the structures that we have here, remember this is the bearish trend line that was broken yesterday, and you can see there is a likelihood that we could have price action retrace back into that $80.45 level, which happened to be the support line we had at the beginning of the week. And at the same time, it also shares a confluence with that bearish trend line that we have here. So if price action breaks down the $81.20 level to the downside and we start seeing selling pressure below the structure, we might likely see a retracement phase into the downside into the $80.45 maybe. And then what we are going to be looking out for at this point is to start seeing buy pressure above the structure in our lower time frame, so that we can join that wave of bullish momentum that will be the trend continuation to the upside. So now that we have this perspective in mind, I will be suggesting that we hold on a little bit here, as I wouldn't be joining anytime soon right now based on the situation that is happening around this area. If you look at the nature of the consolidation phase here, you will notice that if you look at the wick of those candles, you will see sharp rejection, giving us a clue of selling pressures. That's showing signs that participants in this market are trying to go into a profit-taking activity prior to the macroeconomic event coming up today. So because of the macroeconomic event coming up today, definitely majority would want to step aside from the market to have an idea of what is really going to be happening during the event, and then come back in to further enforce whatever position they are in if the data coming favorable, and if it does the opposite, then we get ready for a reversal move. So I'm of the opinion that if we have price drop below the $81.20 level and we start seeing selling pressure below the $81.20 level during the trading session today, I'm of the opinion that we might be seeing a retracement back into structure before that second wave of bullish momentum happen. And if that is going to be the case, I would advise you, if you are not a counter trend trader, you are not a scalper, I would suggest that you stay out of this retracement phase and wait for that buy opportunity at the bus stop around that area, where we shall be looking out for a reversal pattern. But if you are a counter trend trader, you are a scalper, where you all understand that whenever we are taking this kind of counter trend move, we want to ensure that we are around on our chart to be able to secure our position by moving our stop loss accordingly as price action moves in our favor. So if this happens and price drops below the $81.20 level and it continues to the downside, we start seeing selling pressure below that structure. A breakdown of the $81 level will welcome an opportunity to secure the position by moving our stop loss probably to our entry point, just to see how price action will be reacting to the $81 mark. And if price action breaks down that $81 mark level, selling pressure resumes below that structure, it will welcome additional sell position, and we want to ride it all the way to the downside, moving our stop loss accordingly as price action moves in our favor. And if you are a counter trend trader, you could stand to gain about 80 pips, 85 pips thereabout if price action move in that direction. So at this point, this is what I want to be looking out for based on this current market structure. Now, another thing that could happen here, despite you all know what we look out for, we don't put our heads in one basket. We want to make sure that we are open to all possible scenarios that could likely happen in this market. So another thing that I could check out here to anticipate another opportunity here is by bringing out our line chart so that we can figure out what is really happening within this consolidation phase that we have here. So if we connect the higher highs on this consolidation phase, we should be having something like this. Then I would like to extend the same structure to the downside. So I will be bringing out my candle chart right now and then look at what we have here. So you can see we have something that looks like an ascending channel, which is more or less a consolidation phase at this point. And one thing about this consolidation phase is that most of the time, if we look at it from a technical standpoint, a breakdown of that support line definitely will be welcome in sell position in this market. But I will feel comfortable if price action drops below that $81.20 level to join that retracement to the downside at this point. But if at any point in time, if despite the fact we are looking out for selling opportunities here, if at any point in time price action breaks out of that resistant line of that ascending channel here, then we might be getting ready to buy. Remember, we are not having a buy stop order around that area, as we still need some confirmations to happen in the form of a retest of structure before we want to be joining that move to the upside. But be rest assured that I will be with you on my public platform to give you an update in whatever case happens around this area as we continue to monitor price action in that regard. So at this point in time, we have no trade running. We are out of all the buy positions and we want to remain patient here to wait for a structure to mature before we are joining any potential trading opportunity today. So feel free to drop any inquiries in the comment section if you need me to make clarifications in any aspect of what I just explained so far. So that is that on the US oil for today. I hope we are well equipped to be able to take advantage of any trading opportunity today. So with that being said here, I will be moving on to the next pair that we are going to be treating, that we are following for today, and that is the GBPUSD. Now, on the GBPUSD, we have been experiencing some choppy situations here in the last 24 hours, which wouldn't take us by surprise, as we all know that we are expecting macroeconomic events that will be affecting both these currencies today. Remember, we have the FOMC minutes coming up later on today. We have the CPI, which is a major indicator of the inflation situation in the country or in the US economy. And we also have the Bank of England's governor, who is having a speech later on today. And that will also give us an insight into the health of the UK economy as well. So we can see that majority in the market have been on standby, stepped aside to wait for these events to come up in order to be able to have a well-informed decision before coming into the market. So we might likely see some low liquidity in the market in that regard, hereby leading to a consolidation phase around this area. And this has happened in the last 24 hours. But one thing for sure that we would want to take note of here, first of all, is to look at how the week has started for us, or the GBPUSD. Now, talking about how the week started for us here, remember, yes, on Monday, we had this structure identified where we had the resistant line for the week at the 1.24350 level, which happened to be the resistant line, and then we had a support line here at the 1.240 level. So we saw a little indecision in this market here, where price action was trapped within this channel. And you all know what we look out for whenever we have this kind of simple setup. We want to see price action either break out of the channel or breakdown of the channel for a trading opportunity. So with our stop orders placed at both resistance and support line, we had the support line broken to the downside on Monday to trigger our first sell position for the week. And in fact, price action moved about, how many pips was that on Monday? On Monday, we had about 55 pips move before this bullish momentum happened. So we were able to scoop a small profit there, probably a worst case scenario of 20, or worst case scenario of break even at that point. Then another thing we also noticed during the live session yesterday was the fact that this bullish move here could turn out to be a retracement of that previous impulse. Like if you remember vividly, we laid emphasis on that bullish trend line that was broken here. For the sake of clarity, I would like to share with you the 4 hours time frame, what we saw on the 4 hours time frame on Monday. So let's go to the okay, this is the 4 hours time frame here. So we took into consideration the trading activity between the at the beginning of the month of March till the present moment, and what we saw here was the fact that buyers are very, very strong in this market. And to further emphasize the strength of the buyers in this market, we connected the series of higher lows in this market, which gave us that bullish trend line that you can see on your screen right now. However, things got a little bit interesting on Monday when we finally witnessed the first breakdown of that bullish trend line here, to give us a clue that there is a high chance that sellers might likely come in this market. And if we take into consideration what has been happening in the last couple of weeks here, we had the bearish trend line after connecting the series of lower highs, which further emphasized that sellers are gradually gaining some momentum here in the last couple of weeks. And from a technical standpoint, whenever we have a breakdown of a key significant structure like this, we expect that one point in time price is likely going to come back, do a retest of that structure, and the appearance of selling pressure will definitely be giving us a signal that its trend continuation to the downside is very, very likely at this point. And if you look at what has been happening here in the last 24 hours in this market, you can see that following the retest of that bullish trend line that was broken, we are beginning to see selling pressure resume somewhere around that 1.24350 level and the 1.24500 area, which happens to be our resistant line for the week. And you know what is peculiar with resistant lines? Selling pressures are always found around that area. Now the question is this: will the selling pressure we have been witnessing around the 1.24350 level continue this week in such a way that we'll be seeing a move to the downside, or are we going to be seeing price action break out of that resistant line to the upside, where an opportunity to buy will finally be coming in on this current structure? So these are things that we are going to be looking at today. And obviously, if we look at this sincerely from a technical standpoint, we should be expecting selling opportunities in this market, as the continued selling pressure around this 1.24350 level cannot be ignored. So scaling back into the 1 hour time frame here, let's look at the structure critically so that we can be diplomatic in making a decision for today. So with the current structure we have here, and considering the continued selling pressure around this area, I would want to consider that zone between the 1.245 and the 1.24350 as a very, very strong sell zone, supply zone in this market. So for the sake of that clarity, I will be identifying that area as our supply zone for this week. So let's label this for the sake of clarity. So we have our supply zone here. Let's place this inside the box. Okay. All right, so here we go. So we have our supply zone within the 1.245 and the 1.24350. And remember, we have our resistance line for the week around that area, and we have been witnessing selling pressure around that area, and also that area has also served as a retest of the bullish trend line that was broken on Monday. So at this point in time, selling below the 1.24350 level seems most appropriate at this point. And for those who had sold below the 1.24350, well done to you guys for being on standby to have caught that move, as you will definitely want to be moving your stop loss. Your stop loss shouldn't be anywhere more than that area at the 1.24500 level. So we continue to look out for more opportunities to sell the GBPUSD for today, as long as price action remains below the 1.24350 level. Now, for those who had missed out on this opportunity, we could have our sell stop order below the 1.24200 level, with our stop loss at the previous high here, which will be dovetailing to about how many pips is that? About 30 pips there about maximum on that one. So we shouldn't be looking at anything more than 30 pips stop loss on that one. Then a further breakdown of the 1.2400 level will definitely welcome additional position in this market. Remember, this is our support line at the beginning of the week, which was broken to the downside. So if price action breaks down, retest that structure, we want to be adding more position to our existing trade, and we'll continue to ride the move all the way to the downside. So on the GBPUSD for today, we are going to be holding on to a bearish bias here and looking out for more opportunities to add more sell position as long as price remain below the 1.24350 level. Now, in as much as we are looking out for selling opportunities, you all know that we don't want to keep all our eggs in one basket, as we want to keep our options open just in case buyers come in. And if you look at what has been happening in the last 5 to 6 weeks, we acknowledge the fact that buyers are very, very strong in this market, and we cannot ignore the potential that buyers could likely come in at this point. Now, based on this current structure, what do we want to be seeing on this chart that will give us the idea that buyers are gradually coming in? Well, for me at this particular point in time, since we already have a supply zone just right around that 1.245 and the 1.24350, I would advise that we remain patient and see if price action would ever break out that supply zone. And if we sight a breakout of that structure, then at this point it will be a signal that price action has taken out all the sell positions here. And if we start seeing liquidities for the buyer come in, this will reflect on the chart as multiple rejection of the 1.2450 level. Then we could actually add or join that buy position to the upside. So the only reason why we are going to be buying the GBPUSD today is to see price action break out of that 1.245 level, and if it breaks out that level, we would have witnessed a breakout of that supply zone here, hereby negating all selling pressure around that area. So that is what I'm going to be looking out today for any buy opportunity in this market. So that is that on the GBPUSD. If you have any questions, let me know in the comment section. So moving on right now, we shall be going into the next up pair, which is the XAUUSD. On the XAUUSD, we have been quite profitable so far in the last 24 hours as we took advantage of a buy position during the course of yesterday's New York session. But before we go into the details of how we took advantage of that buy position, it is very important here that we go through what has really been going on since the beginning of the week and what structure we saw in this market that made us to come into that conclusion of buying at that particular point in time. So if you look at the XAUUSD chart since the beginning of the week, you would notice that the week started on the bearish note. And if we consider what has been happening since last week, we saw that the bearish momentum started last week and we continue to find lower highs in this market. And to further emphasize the strength of the sellers at this particular juncture, we connected a series of lower highs which gave us that beautiful bearish trend line that you can see on your screen. And this was the key. This was one of the structures that we were supposed to be using to guide our trading activity for this week, as we said on Monday that as long as price remain below the bearish trend line, we'll feel comfortable in a sell position. And if price action ever breaks out of that trend line, then we want to be anticipating a bullish momentum. Now, if you look at what happened at the beginning of the week, we saw price action began the week at a $2008 MAC. As you can see, the week started on the bearish note. Price action dropped into that support line at the 1,989. And during our live session on Monday, we said because of the bearish signal that we saw at the beginning of the week, we are going to be looking forward to this move as a retracement of that impulsive move, where we want to be looking out for selling pressure around the 2000 mark or the $2008 mark, which shares a confluence with a trend line for us to join a bearish move. And the bearish signal didn't came very, very early on Monday, as we saw this situation here on our lower time frame, and with our sell stop order below the $2,000 mark, we had a sell position triggered, and in fact price action moved about 190 pips in our favor before this bullish momentum began. And during the live session yesterday, we acknowledged the fact that buyers are gradually gaining some momentum in this market. As you can see, what happened at the beginning of the week, we saw buy pressure here on Monday, and all attempt by the sellers to break down to 1,989 on that same Monday was negated by the buyers again here. And you can see the candle here, we had a very sharp rejection of the structure, hereby giving us a beautiful demand zone to use as a platform for a bullish momentum. But we couldn't join any buy position at this particular point in time, as price action can still remain above that bearish trend line that we said is going to be our yardstick for trading activity. So we needed price action to break out of that trend line to now give us a sign that this trend line no longer has the capacity to hold bearish momentum anymore. And this was evident during the New York session yesterday. We saw the breakout of the trend line, which was a beautiful signal that price will be going to the upside. And I told you also yesterday that as soon as price breaks out of both the $2,000 mark and that bearish trend line, we could actually join right away and have our stop loss somewhere right below the trend line, as there is a likelihood that price will come back to do a retest of that structure before another wave of bullish momentum will happen. And this was exactly what happened here. We saw the breakout retest of the $2,000 mark, and price action was triggered above the $2,000 level, and we can see price moved about 210 pips in our favor before we started seeing the sell pressure resume in this market. And I shared here on my public platform this morning that we want to be securing our position by moving our stop loss. So let me show you my publication on the XAUUSD on my TradingView platform. So this morning, so this is where we were planning to buy. So we bought here, price action came back to retest structure, and this morning I said 2 buy positions running with over 200 pips in profit. So I said secure all buy position right now, and I hope you did that as written there. And if you had done that, you would have been taken out of that position at this particular point in time. So right now, what is going to be our plans for today? How do we intend to take advantage of any potential trading opportunity here? Well, in the last 4 hours now, we have been seeing selling pressure resume around the $2,020 mark. And if you go to as far back as last week's trading session, I guess we can see the same selling pressure came in around that area. So now, is this sell pressure going to last long, or is this a retracement of the previous impulsive move? Remember, we had the breakout of that $2,008 mark here, and from a technical standpoint, whenever we have a breakout of a structure, we expect that one point in time price is likely going to come back, retest the structure, as we're going to be anticipating another wave of bullish momentum. So at this point in time, we need to be very patient here and wait to see how price action will be reacting to the $2,008 mark level to decide if we are going to be buying or getting ready to sell the XAUUSD for today. And in order to make things a little bit easy for the highs to spot a trading opportunity, we want to acknowledge the bullish momentum that started this week here. As you can see, price has consistently found higher highs and higher lows in this market. And to acknowledge that, we want to be bringing out our line chart so that we can connect the series of higher lows in this market, so that we can find a structure that we can use to guide our trading activity for today. So I think we are going to be having a couple of structures here. So we have a first one here. After connecting the series of higher lows, then I would rather make duplicate this one so that it can cover the lowest point that we have here. So I will thicken this a little bit so that it emphasizes that trend line for us. So we bring back our candle chart to do some readjustment. So we have something like this and something like this. All right, so we have a trend line now that we can use to guide our trading activity for today. So we've already established a bullish momentum after the 1989 appeared to be a platform for this trend continuation to the upside. So what we are going to be doing right now, as you can see, the $2008 mark shares a beautiful confluence with that bullish trend line. So we are going to remain patient here. So we are going to be looking out for reversal patterns, buying pressure around or above the $2008 mark to be part of a trend continuation to the upside. So to give a visual representation of what I'm talking about, so we are going to be looking forward to something like this. Buy pressure, come in, price action evolves into a reversal pattern. It could be a double bottom or a head and shoulder pattern. Then a breakout retest will give us an opportunity to join, where a breakout of the $2020 level will welcome more opportunities to add more position to our existing trade, and the breakout of the 2032 will also welcome additional position to our existing trade here. So this is what we are looking out for today. So we are holding on to a bullish bias on the XAUUSD today, as long as we start seeing buy pressure above the $2008 mark, which I said here shares a confluence with that bullish trend line. With that being said here, we are going to put into consideration the potentials of the sellers too as well. Obviously, you can see that since last week's trading session, we have been witnessing some selling pressure in this market, which we emphasized with the bearish trend line that we identified at the beginning of the week. So what do we want to be seeing on the chart here that will suggest that sellers probably could take over this market anytime soon? Well, one thing I want to see here, since we already have a bullish trend line, which we said is going to be serving as our yardstick for trading activity today. So we said as long as the bullish trend line is being respected, then we hold on to our bullish bias. But if at any point in time price action breaks down both the bullish trend line and the $2008 mark, definitely at this point we will have no choice than to start thinking of getting ready to sell the XAUUSD. But remember, we are not getting too excited, as we still need some confirmation to happen. So as soon as price breaks down the trend line or even comes around the trend line, you all know what we want to be doing. We are going to be going down into the lower time frame, like your 15 minutes, 5 minutes time frame, to look forward to see how price action will react to that level. So if we have a breakdown of the $2008 mark and we start seeing retest of structure, where we start seeing signs that buyers are finding it difficult to climb back above both the trend line and the $2008 mark, then we would have no choice than to start looking out for selling opportunities in this market, where price action might still come back into the 1989 level, which happens to be our demand zone for the week. So let's see how it plays out around this area. So we are going, price is actually heading towards a very critical point in the market right now, where we need to be very patient and conscious to be able to decipher what will really happen around that area. So don't worry, I will keep you posted in my comment section on my public platform to see how we are going to be anticipating our next move in this market. So that is that on the XAUUSD. If you have any questions, feel free to drop your inquiries in the comment section. So I will be moving on to the next pair, which is going to be the last PF that we are going to be treating for today, and that is the USDJPY. And on the USDJPY, we have been quite profitable on this pair since in the last 68 hours thereabout, as we have been buying the USDJPY since the beginning of the week. So we rode the move all the way from the 132.400 level, as you can see here on Monday. So we rode the move all the way up, added more position at the 132.800 and the 133.500 area before we were taken out from that position here yesterday morning. And I told us all here that we are going to be seeing this move here, this bearish move here, as a retracement of that impulsive move that started the week around this area. So, and we said we are going to be looking out for more opportunities around this area if we start seeing buy pressure to join the second wave of bullish momentum. And in order to be able to identify if a reversal pattern has finally come in, we scale down to a lower time frame, which was the 15 minutes time frame, to identify a simple setup that we can use to guide our trading activity. And if you've been following me on my public platform, this is what we were able to identify during the New York session yesterday, as we had a consolidation phase between the 133.200 level and the 133.00 area, where we said either a breakout or breakdown of the channel will be welcoming a trading opportunity. And for us to be on the same page here, I would like to share with you that update on my public platform, where I told us to anticipate either a trend continuation or a reversal pattern at that point. So this is the first buy position we had on Monday, and then we saw, okay, this is it right here. So I stated here after our morning live session yesterday, I stated here that we have a channel already, so we might likely see price action break out of the channel to incite the trend continuation. And if price action breaks down the channel, we are going to be looking out for buying opportunity around the 132.800 level. But that did not happen. We saw the breakout instead happen, which triggered our buy position. And as you can see, I told us to secure our buy positions here, and we hope that price action will break out of the 133.500 level to be able to add more position to our existing trade. And as you can see here, we had the buy position triggered, and we continue to ride the move all the way to the upside. We also hoped that the 133.750 would also be broken. So as you can see here, we have a situation. So this morning I told us all to secure all buy positions. As price action, we started seeing selling pressure around the 133.850. So let's go back into our live chart right now, and let's see what to expect for today. So I hope you've moved your stop loss and secure your current buy position, and if you have done that, that is beautiful. So let's see what is going on the chart right now. Will selling pressure continue to the downside here? Well, let's look at this closely to be able to plan ahead of the London and New York session. So now the first thing I would like us to do here is to acknowledge the fact that price action has been bullish since last week. And when we connected the series of higher lows, remember we had this bullish trend line figured out, which led to the breakout of that bearish trend line. So for the sake of clarity, I will be extending this bullish trend line further into the future, as we will be needing it anytime soon. So right now we have a situation here where price action is currently ranging between the 133.500 level, which happens to be the neckline of that potential reversal pattern we identified on our higher time frame. If you had watched my weekly videos, you will have seen how important I said the 133.500 level will be for us this week. So we can see right now that price action is currently trading above that level. And one thing we're also not going to ignore here is the 133.850, which happens to be a resistant level at this particular point in time. As you can see, we have been witnessing selling pressure around this area since the beginning of the week. The first time price got into the 133.850 was on Monday, as you can see here, and during the course of yesterday's early hours of today, we saw multiple rejection of the 133.850, giving us a clue that sellers are present at that point. So we might likely see a situation where price could drop to the downside to come and respect this bullish trend line. So there is a very high chance that this is very possible before another wave of bullish momentum will happen. I'm still holding on to a bullish bias here unless the market structure states otherwise in such a way that price action breaks down that bullish trend line. Then at that point, I might be thinking of getting ready to sell. And even if I'm going to be selling at this point, we cannot ignore the bearish trend line that was broken to the upside here. Remember, we had the bearish trend line broken to the upside here on Monday. I think this will be more clearer if I scale up into the 4 hours time frame. So if we scale up into the 4 hours time frame, hold on a second, let's look at this from the 4 hours time frame here. Remember that since the month of March this year, price has been bearish, and we connected a series of lower highs here to give us this bearish trend line that you can see on your screen. Now that we have a breakout of the trend line to the upside, there is a high chance that the trend line may no longer be strong enough to continue to maintain that bearish pressure. And considering the fact that price has been finding higher lows since the later part of the month of March, we can see we have been witnessing bullish momentum, which led to the structure. I'm of the opinion that price action will still be going to the upside. But at one point in time, there is a high chance that a retracement phase will happen. You all know from a technical standpoint, whenever we have a breakout of a key structure like this, we expect that one point in time price is likely going to come back and retest that structure. It could be the trend line or the 132.400, but the most important pattern we will be looking forward to is a reversal pattern that will incite the trend continuation to the upside. So this retest of this trend line will only happen if price action breaks down the 133.500, which shares a confluence with that bullish trend line that we identified at the beginning of the week. So what this simply means is that if price action breaks down the 133.500, that is, if the selling pressure here continues to get stronger, then we might see a situation where price breaks down the 133.500 and the bullish trend line to incite a retracement into structure, which also shares a confluence with that bullish trend line that started a couple of weeks ago here, before another wave of bullish momentum will happen in this market. So we need to be very careful at this point. We wanted to see how price action will be relating to this channel that we have between the 133.850 and the 133.500 to know what our next line of action will be. So to buy the USDJPY today, or to add more buy position here, I would rather see a breakout. Scale down to the lower time frame, look out for buy pressure to happen before joining this trend continuation to the upside. And if a sell momentum will be coming, then we want to see breakdown of the 133.500 to sell to the downside, which could give us about this is a counter trend opportunity. Remember, about 160 pips before we start looking out for buying opportunities in this market. So this is what I will be looking forward to on the USDJPY today, and be rest assured that I will be with you in the comment section of my public platform to give you an update on what our expectations will be. So on the USDJPY, we remain patient. Ensure you have moved your stop loss to secure your position, and securing your position should be, your stop loss should be around the 133.500 on all our existing positions here. So that is that on the USDJPY for today, and on this note, I want to be calling it a day here. So it has been a wonderful moment with you guys. I really appreciate every single time here spent with you, and I wish you best of luck today. And I also look forward to seeing you in the comment section on my TradingView platform and on the Telegram platform as we continue to monitor price action. Remember that we have macroeconomic events coming up today. Ensure you've secured all your existing positions, as we might likely be seeing some volatility come in the market later on today. So do have a wonderful day, everyone. See you in the comment section as usual, and bye-bye.